All right, and those are the interbank FX rates from the Bank of Ghana. Could be much higher on the retail market. Let's begin with the currency market. The Ghana cedi is suffering from lack of Eurobond inflows as it has come under serious selling pressures. In recent days, the local currency has depreciated by about 18% to the dollar on the interbank market and 26% on the retail market. Senior economic and currency analyst with Data Bank Research, Courage Mate, joins me on Zoom to discuss this. Courage, great to have you on the program this afternoon. First, educate us on what the challenge is, why the cedi has depreciated by, as I said, 18% to the dollar on the interbank market and 26% on the retail market.
Right. Good afternoon, Daryl. Thanks for having me. There are a gamut of issues. I mean, from fundamental issues to issues as subtle as sentiment or intangible as confidence levels being very low. But one thing we need to hammer on a lot is the supply side, because historically what we've done is to feed the market with the mindset of Eurobond inflows every year. Now, this year is like no other year because we do not have access to the Eurobond market. And so our reserve is excluding Eurobond inflows, and we are heavily exposed on that front. And so we do not have sufficient supply on the market to match the demand. The level of demand on the forward auctions currently is between 3 to 4 times the supply on the market from the central bank. And in recent weeks, what we've also noticed is that the central bank's interventions on the spot and forward market is steadily waning because the central bank is also in a defensive mode for the reserves. So because of this psychology of the market that we normally would get Eurobonds, and now we don't have Eurobonds, then there's scramble for available supply. And in recent weeks, there's also been negative noise on the market about reserves dropping significantly to weeks of import cover. That has also not helped sentiment on the market. So the cedi has taken a lot of heat on the back of that, in addition to other fundamental issues like the fiscal side and the inflation story that needs to be resolved.
Well, while we look at solutions, will the $750 million loan agreement passed by Parliament yesterday be a game changer?
Game changer, no, because the total size of our external financing requirement is more than $750 million. That is not to discount the benefit of that, but it doesn't, and it definitely doesn't look like a game changer. But in the interim, it's a good inflow, it's timely, and we say it's timely because on Monday, this coming Monday, about 4.7 billion Ghana cedis would mature on Government of Ghana 5-year paper. The government is in the process of trying to issue a new security to roll that over. But what we see is that about 52% of that is held by foreign investors. Now, currently, the posture of foreign investors is to exit markets like ours, and we've been seeing that since the back end of last year. And that 52% holding is about $300 million US. So you would say that the $750 million approval by Parliament is timely because then that should support the central bank support if and only if the foreign investors seek to exit that $300 million. So it's timely in that sense. But then it doesn't look like a game changer because the size of our total external financing need is way above 750. So we need to look forward to the additional $250 million and also look forward to the Cocoa Board syndicated loans later in the year.
Plus, we need to figure out new ways to cushion our forex reserves. What new ways can we adopt?
There are a number of ways. Some of them are medium to long-term measures. One of them being the central bank kind of accelerating the program to stock up a lot of gold reserves in the foreign exchange reserve that we have currently, because that is the one that you don't borrow, you own. Unlike Eurobonds where you borrow and you have to pay back and service within a year and it's out and you have to go and borrow another one to replenish. So if we are able to seize the opportunity with the domestic gold purchase program and increase our holdings of gold, then that should also sustainably improve our reserve cover. Also, we need to find ways to increase our domestic ownership of the export value chain. That is something we've not done too well. And a lot of responsibility lies even on the financial sector players, where you see banks financing commerce, trades. This is just buying and selling. It doesn't encourage a lot of export or manufacturing for export. We need the Development Bank Ghana to set up quickly and support long-term capital financing to support export. The Export-Import Bank, the Ghana Export-Import Bank, also has a lot of role to play in that regard. Then fiscal policy is also very critical in all of this. So at the end of the day, you have the opportunity to set up or implement long-term policies. But in the short term, what you can only do is to find a good balance between tight monetary policy, tight fiscal policy, but one that does not undermine growth to the extent of pulling down exports as well.
All right, finally, Courage, a big day on Monday, budget presentation, policy rate announcement, and whatever decision is taken is critical in influencing the currency, the stability of the city and the economy as a whole. Your expectations?
Well, those are one of the short-term measures or windows you have to look forward to. On the budget side, it's very critical to see government signaling commitments to expenditure control, because expenditure is one addition to aggregate demand, and aggregate demand being higher than domestic productive capacity means that you export more to augment. You export more to augment means that you demand a lot more foreign currency, so pressure on your local currency. So you want to see government signaling commitments to expenditure control, even though there's been a lot of measures to improve revenue, but we need to look at expenditure as well. And on the monetary side, you would think that the slowdown in growth should soften the central bank's hawkish tendencies, but the depreciation pressures could just be opening the window for further rate hikes on Monday as well. So overall, what we expect to see is a combination of renewed or commitments to tight fiscal and monetary policy regime over the next 6 to 12 month outlook, until we start to see inflation decelerating and the fiscal balance improving. And then the IMF program, we need to see more information about the IMF program, because one of the questions investors are asking is around what the IMF program will need for Ghana's debt situation. So we'll need more information from the government in the media budget around the plans and the development situation around the public debt issues, so that investor confidence can then be restored, at least to some extent, to ease the pressure on the local currency.
Thank you very much. Senior economist with Data Bank Research, Courage Mate there. Now, Ghana could end up securing more than the direct financial package coming from the IMF under a program for Ghana. It's emerged that Ghana will get additional financial support from the World Bank as well as other development partners. This could put total funding advanced to more than $5 billion. Here's George Jaffe with more.
Based on what government is proposing, the country could be getting about $1 to $3 billion spread over the years that the program should be completed, as well as taking the necessary correction. This will, however, be dependent on getting the IMF's blessings for our program and Ghana's quota with the fund in Washington, D.C., and the level of reforms that government is prepared to undertake. Typically for such programs, the World Bank is expected to come on board with some financial package that will go directly to government to support some projects identified in the budget. This is because the program funds from the IMF will directly go to the Bank of Ghana to support the country's international reserves. We are also learning that other development partners are expected to come on board as soon as a program is put together for Ghana. We should also not forget the fact that the restoration of investor confidence based on the program being finalized for Ghana will come with some fresh funds into the economy. But since one of the major aims of this program is debt sustainability, disbursement to be structured in a way that will not worsen Ghana's total debt situation. The country is already making some good savings on its Eurobond and Treasury bills because of Ghana's decision to go for an IMF program. But for some, as long as government is prepared to take those tough measures to deal with the current challenges facing the economy, then a fund program wouldn't just be about that direct financial package coming from the IMF, other related benefits that will fast-track the recovery of the economy.
Well, let's turn to the oil and gas industry. Tullow Oil has announced that it has discovered more gas deposits on the Jubilee and Tweneboa fields in the country. The firm puts the estimates at 2 trillion cubic feet of gas. It says this might be critical in dealing with Ghana's energy needs. This was captured in the firm's trading statement and operational update issued this week. Here's more in this report.
Tullow Oil, in its trading statement, maintained that it is looking forward to government approval on the way forward when it comes to developing these gas to meet the country's energy needs, as well as aiding exploration activity. On exploratory activities, Tullow Oil also disclosed that it has been able to deliver 7 new wells, 6 at Jubilee Field and 1 at the 10 area. This is part of an ongoing drilling program which started in April 2021. It has also been able to complete the drilling of 2 additional wells. Tullow also has announced that it has taken over maintenance and operation of the Jubilee FPSO from the 1st of July this year from MODEC. The move, Tullow says, is part of a broader plan to make its assets in Ghana more efficient and cost-effective. The company has, however, described the first half of this year as a very good one, influenced by measures instituted in 2021. A careful look at the trading statement shows some interesting year for Tullow, as revenue also strongly picked up. It's not clear for now how this might impact positively on government revenue going forward.
Well, Ben Boache is Executive Director of the Africa Center for Energy Policy. He joins us on Zoom. Great to have you on the program. This is certainly some good news for the country. How critical is it in meeting our energy needs?
Thanks for having me. I think these are a good information from the companies who are here. And if we have those prospects, government will have to take the decision to support effort to really bring these resources on stream as quickly as possible. I'm not sure how much more the domestic market can absorb, but if we don't have the potential, we may have to explore the export market, particularly when Europe now needs gas more than ever because of the Russian, and Ukraine war. So we need to hasten our decisions to give the needed clearance for Tullow to proceed with the prospect. Fortunately for us, most of the fiscal issues are locked in law, and therefore you don't need so much negotiation, except that things are slow in our context, and the ministry will have to be a bit quick in taking decisions to actually support this. It's about the second time in 2 months that we had Tullow say this, and it appears that they're doing more advocacy than what government is doing to really approach them to see how quickly some of these resources can be brought on stream to support, the fiscal situation of our country as we have it now.
Yeah, I mean, the first time I read the story, I was thinking, well, recently we're just flaring excess gas, and because we couldn't take them, and so whether or not this was something to be excited about, you'd wonder. You talk about the potential for export. I mean, based on the quantity of gas they have announced, they have discovered, how viable is it really for us and in getting some revenue from the gas market?
I think we have to allow the private sector to manage, these processes. It's usually when government intervenes in the business and says they want to do it and they are not able to do it, then, the country suffers. I mean, the problems with our gas sector is largely government, right? We have been flaring some of the gas that were even given to us for free. Remember, about 200 billion standard cubic feet of gas was given to us as part of the Jubilee project, and we have successfully flared significant volumes. In 2 years, we did about $300 million of flared gas, right? And if we allow the private sector, they could take advantage, perhaps look at solutions that, even though the volumes are not much, they could still manage to liquefy them and export those gas and make sure that some revenue at least can come to the state without assuming responsibility that we cannot really deliver on. And particularly within this current context where government is struggling to raise money to support its budget, I do not see government stretching itself to think that we can still deliver some of these projects. But we have to allow the private sector to do the investment and bear the risk and allow the country to benefit from it.
Yeah, we are talking about the country's benefits, but I also want us to turn to Tullow because the company itself has had its own difficulties. It recently merged with Capricorn. So how far is this also going to be a boost for the company in itself?
I think merging with Capricorn rather brings resources because you have two companies merging to pool their assets. So that should actually be some good news and should bring benefits. So what we rather need to do is to, deepen our role. The state role is to really regulate and ensure that decisions can be taken much more quicker to optimize the industry. And that is where we are failing. So if Talos says they have resources, it is really about giving them the requisite permits and ensuring that they deliver on those permits, right? So that we are properly regulating the space. If we, go to sleep and not provide the necessary clearance for them to proceed, then we are not delivering on our part of the bargain. And that is where government will have to watch it to ensure that whatever the claims are, it is not government standing on the way in the way, but the company has the room to actually deliver.
And one last question. Yesterday, a court ordered government to halt payments to ENI Vitol for gas supplied from Sankofa field. Your thoughts on this latest development and what it signifies as the battle for or against unitization continues?
No, I think it's an incredible decision, and we have criticized those decisions consistently. It's not the first time. The court has given about 3 rulings on the ENI case, and it's all just because a letter has been written by the Ministry of Energy unitizing 2 fields. And our position has been that if the court keep ruling on just the letter that has been written by a minister, without going to a substantive issue as to whether the unitization is actually right or not. And that case, the substantive case has not been heard. But we are doing these preliminary rulings, which may come back to hurt the state. Now ENI is going to arbitration, right? And if they win the arbitration, all the damages that would have ensued because of these rulings from the court is not going to be borne by the private sector. It's going to be borne by the state, because the state that wrote that letter to unitize the field without exhausting the technical issues that have to be addressed. So I think government has to do the needful and ensure that these litigations, even if you are right, you have to make sure that you are not sending wrong signals to the industry through litigation. But unfortunately, that's what government has been doing over the years, showing muzzle rather than working with the industry in partnership to actually develop the sector. And you see the trend. Even oil production is declining, and we are fighting in court with the people with the money to actually produce the oil for us. And these are some of the governance issues that are plaguing Ghana's oil sector. And the earlier government took a decision to really engage, use science, right, technical solutions, and not documents, law, and pen to actually disrupt the energy sector. And this is what is happening, and it's really unfortunate.
Thanks for your thoughts this afternoon, Ben Boakye, Executive Director of ASEP. Appreciate your time with us this afternoon on The Marketplace. Now, after enjoying a long reign as the king of streaming, Netflix faces a tough fight to keep its crown. It's lost almost 1 million subscribers between April and June as more people decided to quit the service. Rivals are challenging its dominance whilst price hikes have taken a toll. Now, here's what some subscribers in Ghana have been saying about the streaming giant services.
Do you have a Netflix account?
Yeah, I do.
Have you shared the passwords with other people?
Yes, I have. My kid sister. And then a third party. I've paid for like 4 screens, so I can share with 4 people or 3 people. Yeah, I don't think it has to be like that. Because once I've been able to buy maybe 4 screens or 2 screens, I can share with anybody I want to share it with. If I'm sharing with someone, the person doesn't have to pay because I think I've covered for that cost already. If they want to do that, then the cost has to reduce because it's quite expensive.
I'm not into Netflix, but then I think I've heard a lot about Netflix and the movies that are streaming there. But seriously speaking, I've not taken chance to look for how to actually get an account to watch one. In business today, you can't just cheat others and just have your freedom. And I think it's good for them. But then if that will lead to reducing or the reduction of the price that a subscriber or the account holder will pay, I think that wouldn't be bad at all.
Well, I heard Netflix doesn't allow patching again. For me, I'm not going to purchase Netflix again because I'm not working and it's quite expensive. So I can't promise that like I'll go back to the app again. Yeah.
Like it would be better if you buy your own account, or like, yeah, you just don't buy it at all because you are purchasing because you don't have the money. And right now you are purchasing and they're going to charge you for purchasing. Then it's like they are charging you, so I won't do that.
Looking at the amount of money that goes into Netflix, I'm a student. When I look at my financial status for now, for me to delve money into purchasing like or subscribing onto Netflix and those stuff, I could channel that money into different aspects.
Well, joining us to discuss this further, lead for Eyes of Africa, Henry Kobler. Great to have you. We missed you yesterday, but you're here with us to talk about Netflix. I remember the last time we discussed this about Netflix losing its subscribers. I mean, the conclusion maybe was that because the streaming giant wanted to stop account sharing, you saw the number of subscribers drop. But now there are issues of how much it is costing to be subscribed onto the streaming service, and that is not going well for the company, Henry.
Yeah, so thank you for having me. Generally, when it comes down to subscriber services, I think that generally we're actually looking at a downside of it towards almost most of the platforms. And so it might not necessarily just be about Netflix losing these users, but it's generally cutting up costs. It's also a point where you look at the business model as well, where you come to understand that you're paying every month and every month has its downsides. Unlike most tech products that you have the advantage of either choosing a monthly subscription, which is a bit higher, or paying for a yearly subscription, which is a bit cheaper. And so if Netflix had a point where I could say I would pay for a whole year, I'm sure that people could definitely be sticking around to still use the service because they are paying for a whole year, and so they are sort of having that service available to them. But when you have to do that consistently every month, it sometimes looks irritating. I've had the same experience with some of the streaming services with music, and I've had to go on because I felt that it was just taking my funding. Now, that's a very simple analogy, which is actually being thrown by a lot of young people who are actually accustomed to this kind of services, which is provided. So it might not necessarily be about that as well. The cost, I think, is not too much compared to...
Not too much? Well, it's relative. I mean, especially during these days when there is high cost of living, people have priorities, and maybe paid streaming services may not be one.
Honestly, if you're looking at the cost of getting these productions to come through and some of these contents, I think that if the content is premium like Netflix had initially started, I don't think that the cost is that difficult to look at, and especially based on the business model where you could share passwords and all of that to a particular number of screens. I thought it was better. But now you're looking at the quality as against how much you're paying, and people are looking at it as compared to other services, which is also streaming in terms of Amazon or Hulu or Apple TV. And so the content is sort of not too primary or not too premium to sort of be paying so much for that. But I thought I am just looking at it as adding, let's say, advertisements to it to just reduce the cost is, again, something that a lot of people are also going to have same concerns. I would have concerns about it because when you're looking at the advertisement models, it's actually very intrusive into your privacy, which is a lot of pointers where a lot of people start looking at whenever they also have to start looking into doing advertisements. And so both models really a bit tricky. The only thing I think that would actually solve the problem is if you're providing premium content that people can stick around and watch. And they're also looking at, say, yearly renewals, which is okay for quite a number of people. They've not been able to solve the issues in terms of password sharing. I don't think they would actually be able to do that. But it's tech. When it comes down to tech, I think that they will definitely have a solution, but it will also get them some downtime and some subscribers getting off the platform.
Well, the BBC report I read also spoke about competition from other streaming services, and so that's where Netflix is getting ahead as well. But I mean, let's talk about if you are a manager of Netflix, what strategy you'd employ right now, seeing that you are facing stiff competition and people are really finding it really difficult to pay for your services at this point.
So Daryl, what is Netflix selling? They are selling content. right? So that's the whole point. So far as you can get premium content to people, that's the whole point. You don't need to put a lot, because it becomes very difficult actually surfing through quite a lot of TV series which you really do not get, and they actually do not even have like a complete end to some of these series, right? And so it makes it difficult to sort of watch a series which I know doesn't have a complete end. So it's not quality for me. And so make sure that you're putting a very good content out there. Secondly, look at premium services for, let's say, people who are willing to pay good for, let's say, annual subscriptions. If I pay a year, I will still stick around. Whether a month goes bad or a month goes good, I'll still stick around. So a yearly subscription, I think, would do. Regional subscriptions as well, I think that would be one of the things I have to look at, because the same amount being paid for different regions, I mean, sometimes gets to be a bit difficult. I mean, if you're looking into Ghanaians, paying almost about $11, $15 every month, converting your exchange rate basically looks big for you. But to maybe somebody in the US, it just basically looks like, okay, it's a bit of thing for them. So I think that those are the strategies I would be looking at: premium content, making sure that there's annual subscriptions. I think it cuts across not just Netflix, but for a lot of people are looking into getting into the digital businesses, and I'm looking at how they could definitely be charging people. It's cutting across, like I mentioned, towards music streaming services and all of that. And so it basically means that you just have to look at how you're charging people and how consistent they will be able to.
Right. All right. Thank you very much. I appreciate your perspective, Henry Kobler, lead for ICE of Africa, on issues Netflix is facing at this point. That's the marketplace, everybody. Thanks for watching. My name is Daryl Kwawu. We'll be back same time tomorrow.